Welcome back to another recap, multiple recaps all in one, actually. It's been several days, over a week, since I've done any recaps. Since July 9, I believe it was, that was Wednesday of last week, 2 weeks really, considering it's been Wednesday through the 18th. That was last Friday. I'm making this video Monday morning early, made some notes yesterday evening, Sunday evening, intending to get this video made, but most likely going to get it wrapped up and posted tonight. So I'm just going to cover each of these days that are in this box here. A lot of ups and downs, ultimately up because they're still at new highs. As I'm making this right now on Monday morning, they're pushing up from where they closed on Friday. But we'll just cover the game plans, the levels from each day. I'm not going to go into each day, plot the levels, and show you what happened. If you're following along and you're interested, you could do so yourself and double check the work to see how the levels worked. But I'm going to give you kind of an overview of each day, and I've got every single day recorded. I took trades on most of the days. So when we watch the live recording or the recordings of the live trades, then you can see how trades would have worked if you were playing by the rules. And of course, we'll go over the logs where every trade was tracked. So starting out on Wednesday, July 9, so heading into that day, the big picture trend was still bullish. A slow grind, low volume, classic summer action. Price was flirting with a key bull zone between 621.35 and 621.65. And as long as it stayed above that, the bulls looked poised to keep pushing higher. But if we dropped below 620.34 and held it, that would have been the bears' chance to take control. I framed the day with that zone as the bull axis and 620.34 as the bear axis. We also had the FOMC meeting minutes at 2 p.m. to keep an eye on. Not a guaranteed mover, but definitely something that could shake things up late in the day. Here's the recording of Wednesday's trades. Got into a short position right out of the gate instead of giving the market 15 minutes or so to settle in. Added to that position at the 624.19 level. My 4 contract position got me a base hit eventually. Then later down at the zone between 621.65 and 621.35, I got into a 2 contract position. And I'm getting ahead of myself here, but just want to read through my notes here and explain that not sure what I saw at the time down at that zone, but I must have got cold feet or something because I bailed out of that trade at about a point loss or so, only to see price climb out of that area for the rest of the day. So you see me going long at the zone right here, just got 2 contracts and bailed out right there. But anyway, ended the day above water, and that was Wednesday, July 9. Only trades I took, and I think I'll let this recording go for the rest of the day. There you go. July 10, Thursday morning, we were still dancing around that trend line zone. This time it was between 621.75 and 621.49. Bulls needed to defend it again to keep any hopes of climbing, but the axis for the day was 624.40. But I was cautious. I said I'd want extra confirmation before using that for a trade. The big picture showed a possible slow motion rollover forming, but nothing confirmed yet. Still bullish overall. But the timing was right for a pullback if the bears could get going. With summer volume staying light, I expected a grind higher if the bulls held the zone, but warned that any bear move could be fast. No clear favorite direction that morning, just keeping it tactical, playing for base hits at the levels. So here is our recording for Thursday, July 10. I must have had my reasons to believe at the time that price would go down to 622.75 before bouncing. So I went short with 1 contract, like the second attempt or so as they were heading down there later in the morning. As they were dropping down, it was the exact wrong time as price found support there instead and started climbing. It was with just 1 contract though, so I held on to it. I really should have jumped out of the trade earlier, but I added insult to injury by selling 2 more contracts when price got up to the 625.35 level. So that put my position size at 3 contracts short, but improved my break-even point. So you'll see me go short 2 more contracts up here. I'll scrub ahead here. But I jumped out at a loss. And then later, don't have notes on this, but I know I redeemed myself. So let's just scrub ahead here and find out when the next trade was. There we go. I'm short 6 contracts, up finally at 626.57. Should have just waited on it in the first place. and was able to pull some points out of that trade. Took some time, but let's see. I bought back 5 and then probably trailed the one contract for a few more points. There we go. And actually got my target farther down. So that was it. It's 4 o'clock, right toward the end of the day. Not something I usually like to do is hold a trade that long in the day, but I made the mistake early in the morning and redeemed myself in that last trade. July 11 was Friday, and that game plan called for patience in a market still stuck in the summer mud. Low volume, low conviction, not much clarity on direction. The Bulls were defending that trend line zone again between 621.95 and 621.49, and the day's access point was 625.82. If they could hold multi-candle closes above that level, they'd have an easier shot at grinding higher. In the big picture, the longer we went sideways, the more it looked like a bullish consolidation. But I also mentioned that if something unexpected spooked the market and price closed way down, like say at 614 or lower at the end of the week, then the bears might finally have something to work with. Barring that, it looked like another slow day where the bulls would keep fighting for higher ground. I was watching for a potential bounce continuation off the overnight lows, but also warned not to expect fireworks. Most of the big data was coming next week. So the recording for Friday, I scaled in a little early at the zone, ended up getting filled on 4 contracts. You can see I'm trying to scale in to get 6. So I'm long 4. I missed getting filled on that last order of 2 contracts just by within a point or so. Otherwise, I would have been long 6 before they started to bounce. So I sold 3 of those contracts at a good base hit, about 5 points or so, and trailed the remaining contract over 23 points to my next profit target, which was in front of the next level higher up. I ignored the level at 623.06 on the way up, figuring the 10-point trailer I had could withstand a possible reaction there. And as it turned out, there wasn't much of a reaction anyway. So staying long was the best play. The total was a net 9 points or so on 4 contracts, a little over $1,800 on Friday. And I'm not sure how long I left this recording go. Probably closed up shop earlier than usual. Yeah, about lunchtime. No need to stay in any more trades or get into any more trades at that point. So Monday, July 14 opened with price right back at the trendline zone around 621.72, 621.80, a level we'd seen tested again and again. The big picture trend was still bullish, but I was starting to note how price slipping below key supports on smaller time frames could be the early signs of a shift. Wasn't really sure at this point. I flagged renewed tariff headlines as a potential macro driver that could align with the bearish timing window into August. That said, if price opened right in the middle of the zone, it felt like a coin flip. So I was looking for more clarity before taking any trades there. I preferred the other levels on the board as more actionable setups. With no major data on deck, it was another watch the headlines and manage risk kind of morning, especially with how often price kept poking the same trendline zone. Here's a recording for July 14. On their way down to the zone, I went short, grabbed a few points really fast. It was worth $800 or so because it was 6 contracts, that little blip there. But then I went long around the 622.76 level later when they came back down into it, following my rules. With 6 contracts, you'll see that happen shortly right there. Took 5 off at a few points. Tried to trail the other contract up, but got stopped out on just a few more points. And I'm getting ahead of myself here, but you can see position, I'm long. There we go. Charted up a little bit and didn't hit the target. They came back down and stopped me out right there, I think. And I think that was all I did. Let's scrub ahead here. And I let this recording go for a few more hours. Looks like I closed up shop around 2 o'clock on that day, July 14. Tuesday, on the 15th, it looked like a breakout attempt. The bulls bounced cleanly off the trendline zone on Monday and came into the pre-market pressing above recent all-time highs. But the key battle zone was between 627.35 and 627.65. If the bulls could clear and hold that, the rally might have legs. I didn't have clean levels above 628.19 up until 632.65. So I warned that any move higher could get messy without clear structure. Still, holding above that zone signaled bullish strength. On the flip side, if the market got spooked, the bears needed to reclaim that same zone with hourly closes below it. I also noted that volatility could pick up as the week wore on. While the big picture was still bullish, I reminded viewers that this rally could turn into a fake out if the bears took control, especially with a weekly timing component in play. Here is our recording for July 15. I went long with 3 contracts when the SPY came down into 626.48. I changed my mind and jumped out of that trade with about a 2.25 point loss. I'm not sure why I did this, but I went short with 3 contracts when price was under that level later. I guess I thought they were heading down to the next level and I could jump on board and write it down or get a few points on the way down at least. And then got out of that trade. And I guess that's it. Ended above water. I'm just reading some notes here. Wasn't looking at the market, but we have all this tracked in the log. So I'm just going to scrub ahead here and see what else I had. I had this recording going for the rest of the day, it appears. So there's Tuesday, July 15th. So Wednesday's tone was all about caution. If you played by the rules on Tuesday, you would have had clean base hits at every level pretty much. But I wasn't convinced that we get the same reactions on Wednesday. The zone between 623.92 and 623.40 was the key bull axis. If price held above that, it would suggest that the bulls defended the trend line overnight and might get a bounce. But I warned that any bounce could be short-lived since the bigger picture was starting to flash early signs of a trend reversal, at least at that time. I highlighted the timing component again, pointing out how this week was already showing a textbook pullback setup. On the bear side, if price fell below 620.30, the bears would gain control with an interim target down near 614. But first, they'd need to fight through support down at 616.77 to 616.33. I mentioned I might sit the day out. Focus was key, and this felt like a day where staying on the sidelines could be a smart play. So I do have a recording for Wednesday, July 16. I was not feeling it that morning. I did not get into any trades. And I just had this recording going just to show you by 2 p.m. It looked like they were slowing down. I had things to do, so I closed up shop. But here's a recording of pretty much nothing just to show you that I left the market alone. I kept an eye on it in the morning, but just wasn't feeling it. So here is a recording of nothing. And of course, on the tracking log, we will talk about what you could have done if you traded these levels per the rules. So here it is around 2 o'clock, and that's it. No trades on July 16 for me. On Thursday, the 17th, that setup followed a strong rebound off that long-tested trend line near 622 this time, after a sharp spike below it the day before. Price was climbing back up the breakdown candle from Tuesday, and the bulls looked like they wanted another shot at the highs. So whether they'd break through or fail there would help clarify if Tuesday's drop was a real shift or just a bullish fakeout. In the big picture, I emphasized that all time frames still looked bullish, apart from the timing component we've been tracking, which could still justify a pullback. I reminded subscribers that even in strong uptrends, reversion to the mean is a thing, especially when price looks stretched. But without clear signs of a trend change, it was still base hit territory using the levels, with a watchful eye on how price behaved at the highs from earlier in the week. Recording for the 17th, I went short at a level that was not on the board from the morning. It was a retracement level that I felt okay about right there. You see I'm short 6. I withstood being out of the money for a bit in my 6 contract position, ended up getting a 4-point base hit after being patient for a while. I wasn't near my computer until after 3 p.m. after this recording, so I let this recording go. So I did not see this dialog box pop up with some kind of error till toward the end of the open session here. So that trade was done, or that trade closed out, and I was pretty much done. I'm just going to scrub ahead here, and somewhere along the line, it's probably I was out eating lunch or whatever. This little thing popped up. I didn't see it until I think after 3 p.m. But at that point, I just closed up or at least I let it go till the end of the day. Nothing else to do. Got a decent trade in the morning. So finally, July 18, last Friday, that market came in riding the same bullish grind with the futures pressing into new highs overnight. But I noted that the timing on the hourly and the multi-hour charts was ripe for a potential pullback in the morning session. It wasn't that the market looked mixed. Everything still pointed bullish, but cycle-wise, a reset would not be out of place. I flagged the 10 a.m. data release as something that could trigger a shift if the market didn't like what it saw. The key zone to watch was 627.88 to 628.15, what I called the axis for the day. Holding above it favored the bulls, dropping below it might open the door for the bears to dig in a little. The bigger tell would be the close. If the bulls could finish the day above 628.45, It would strengthen the case for more upside and quiet any talk of a trend change, at least for now, because that would be the weekly close. My recording for Friday, I wanted to see what price would do with that zone between 628.15, 627.88. So I did not get into any trades when price came down into it the first time. Or actually, I didn't get into any trades at all. They stayed under it. And as I said in the morning's game plan for this day, for Friday, that could mean the bears could pull price down more, but I really wasn't willing to go short just yet. So I left the market alone. No trades on Friday. And I'm not sure how long I let the recording go, but it's here just to show that I didn't do anything on Friday. So once again, another day with no trades. And they pretty much stayed under that level, or sorry, under that zone for the entire day. So here are the logs, starting out with a playing by the rules log. And I know it's a lot to look at, but here are all the notes between July 9 and July 18. You can read through the notes. You got all the levels. Everything you see here just covers this period of time right here. And you can see where you would be if you had played by the rules, trading, say, 2 contracts. There's where you would have ended for that period of time. So definitely above water. And you saw all my trades, which are over here on the Sam's Trades log, and notes for each of those trades on the ones that I did take. And every single day, even when I made some silly mistakes and messed up, I was able to redeem myself and end the day above water. And there was a couple days where I didn't trade at all. And they're all highlighted here. So that covers that period of time. Again, today is Monday, July 21st. I'll have this posted hopefully tonight. So back on the daily chart, it's still a slow grind higher. They are currently, I believe, this is Monday again. Let's just go ahead and see where the pre is and where they are in the pre-market. Yeah, they're still pushing the new highs up to 630 or so. Haven't really looked at the futures yet. I'm going to do some analysis to try to find levels for the day on Monday, the 21st. But we'll talk about the big picture. They obviously, or they seem to have a destination higher up, and it's still a slow grind. And the timing component that we talked about in the weekly chart several times last week really didn't come out and show anything obvious. So we're going to see what they're going to do this week. Don't have a whole lot to say at this point. I'll circle back around and cover a forecast in the next video, most likely. So thanks for watching. Sorry for the delay. I know it's a lot of old data to go over, but if you're following along and keeping track of each of these levels to see how they work, then you've got a lot of information to go back and review if you are interested. I will talk to you again soon in the next recap. Thanks, and have a great rest of your day.